That seems like perfect timing. Ashley, you there, and are you ready?
Hey, Ryan, we're ready.
All right, fantastic.
I have Jan, our COO, here with us as well.
Okay, great. Great, nice to meet you both. So just some quick greetings here. So my name is Ryan. I go by XTahoeX in the Discord, and I go by Punkstocks on Twitter. I'm here with Ashley. Ashley, is it Sweet or Sweat?
Sweat.
Sweat. Ashley Sweat, CEO of Rushnet and HeliosDX. Is that correct?
That's correct.
Okay, fantastic. And then you're also there with, you said Jan?
Jan Gerville-Riage, who is the COO of HeliosDX.
Hey there.
All right, fantastic. Nice to meet you. I'm not going to attempt to pronounce the last name. I'm going to go by Jan. Okay, fantastic. Let me do the safe harbor statement and get that out of the way, and then we'll move on. Our discussion may include predictions, estimates, or other information that might be considered forward-looking. While these forward-looking statements represent the company's current judgment on what the future holds, they are subject to risks and uncertainties that could cause actual results to differ materially. You are cautioned not to place undue reliance on these forward-looking statements, which reflect opinions only as the date of this presentation. Please keep in mind that the company is not obligating themselves to revise or publicly release the results of any revision to these forward-looking statements in light of new information or future events. Throughout today's discussion, we will attempt to present some important factors relating to the company's business that may affect any predictions. And with that, guys, welcome. If you can do me a favor and give me a quick synopsis of what Rushnet is and what HeliosDX is, and maybe some background of both you guys.
Yeah, great. I'll certainly do so. So I'll take a step back. First off, this is Ashley Sweat, CEO of Rushnet and HeliosDX. When we take a step back to the last 14 months and look at Rushnet prior to my acquisition and control over Rushnet. Rushnet was essentially a dark shell company that was not pink current, certainly not audited, and really with no substantial business looking forward. Over the last 14 months, since I've acquired Rushnet and taken full control of Rushnet, we've brought in two entities, one being HeliosDX, which is the main driver. HeliosDX is a diagnostics laboratory that reaches across the country, offering toxicology, behavioral health, PCR, which is infectious disease, allergy testing, and soon to be a couple other tests. Over the last year or so, we also brought in Grand Asia Healthcare, which is a billing and coding company, which is essentially a sister company to HeliosDX. Over the last 14 months, we've accomplished quite a bit. We brought Rushnet out from the dark. It's now a pink current company. We have updated all financials essentially every quarter since summer of 2021. Soon we'll release some audit results to further substantiate who we are and what we've done and accomplished. Jan, anything else you want to add to that?
None other than just, of course, we'll elaborate more on the call, but there's just been a substantial amount of work to be done, both by our staff internally with HeliosDX as well as Grand Asia, in the efforts that we put forward to, accomplish, to move the audit forward and to aim and continue to get to the path of acquisitions and such in the future. So I know we'll touch more on this in the interview, but there's a lot of work that's been done both internally as well as with our partners. We've got the SEC attorneys and accounting firms and auditors that are all working together to get that done. So.
Fantastic. And let me give you a little background on me. I'm not an investor in the company, so I've done a little due diligence on it. I'm not an investor for any particular reason. Just am not. So I'm going to ask some questions here that may not make a lot of sense to myself, but these are questions that are brought on by people from Twitter and from within the Discord. So if you want to spoon feed me with some of the information that I may not know, that'd be good for other investors that may not be invested also, and may be future investors. So,
well, Ryan, what do you think if we go through the questions and if there's some information that we feel that is of importance, let us kind of do a recap at the end and touch
Yeah,
on
for
some
sure.
highlights that we want to make sure we get out to your audience.
Yeah, absolutely. That's great. So with that being said, let's jump into some of the questions here. The first one we got is, I do understand there's an audit being done. We've, talked a little bit about it in the opening here. So the first question is, when do you guys expect and anticipate this audit to be completed?
Well, it's a fair question. If I've learned anything over the last 45 days is not to expect when the audit's going to be done. But here's what I can tell you about the audit. It is the financial portion of the audit has been done for at least 30 days, if not longer. There are certain things that with the auditor and our accounting firm, along with the management here at HeliosDX, we're working through just to make sure that we put our balance sheet, we put the company in the right standing as we move forward. So with that being said, I can't give you a definitive date on when the audit's going to be completed. Here's what I can tell you though. We have received our final invoice of the audit, and we are in preparations now to pay that invoice. And it is my way of doing business is I typically wouldn't pay for anything until I have a completed said widget in hand or a completed document in hand.
Makes sense, and it's always better to not overpromise and underdeliver. So I totally understand what you're saying. And all right, where does the company stand with the Reg A submission?
So the Reg A, and that's one of the things that slowed down the audit here in the last 2 to 3 weeks, is the auditors want to review the Reg A, and legally they have to review the Reg A since our Reg A is a Tier 2 Reg A, which is of importance, us that we're going to be an audited entity, and not just an OTC audit. We're being audited just like Google or Amazon or Apple or any other big board stock would be audited by an auditing firm. So why that's important, it allows us to submit a Reg A via a Tier 2. And it really puts a lot of extra light and shows a lot of validity to who we are and what we're doing as a company. We were able to avoid blue sky, which limits you to states, where you have to go state by state and submit individual applications. So there's a lot of advantages to the having the auditing team. Let me back up. There's a lot of advantages for us holding off on the Reg A and submitted it when we're completely audited. So where we stand on that is we did just receive the draft of the Reg A, and I expect that to be in the hands of the auditors here in the next, I'm going to say 48 to 72 hours, of which they have promised a expedited turnaround time. And that's really the last step. The audit would be released along with the Reg A at the same time. And then both of those documents would be submitted to the SEC.
Right. And also one of the benefits too of being audited and subject to the SEC regulations, right, would be that upon your stock price getting above a penny, you could move to OTCQB, that type of thing, right? It's easy. It's an easy move versus having to wait for an audit at that time, correct?
Correct.
Okay.
And the other thing I want to say, just while I touched on the SEC, is, we let on Twitter, we let everyone know that we had filed to take back control of the CCC, or essentially take back control of Rushnet via the SEC. Why that's important is it was originally Aurora Precious Metals was the legal entity of Rushnet. So if you go back through years and years and years and all the name changes, that's what the company was. So, a lot of stuff on Twitter I read that it's just, we're just resetting the password. And that's about as far from the truth or inaccurate as possible. It was actually, we had to submit 30 documents to show chain of custody of the company over the last 20 years to date, to show that actually the company has done this, and this over the last 20 years. And that I do as the director and CEO of Rushnet have control and do own the control of Rushnet in order to take back control of the SEC or the CCC. I'm happy to report that After 2 weeks, we did get the approval this morning, which is a major step for us.
Yeah.
Because what that's going to mean is now we have a clear path to submit our Reg A. We have a clear path to here in the near term to become either alternate reporting or fully reporting if we so choose. So it's a big step for the company, one
Right.
that shouldn't be minimized.
Right. Definitely sounds good. As far as acquisitions goes, are you guys still actively looking for different acquisitions?
Yeah, we've had a binding LOI in place for the last year. It's a laboratory that I happen to have a personal relationship with the owners of the lab. So it's a friendly acquisition. Thankfully, because they've been patient through our process of trying to get Rushnet in a place where we could do what we're about to do, and that's become audited and submit the Reg A. So where we're at today is we are expecting a finalized purchase agreement for this acquisition. I expect it across my desk, hopefully in the next 48 hours. Which really will allow us to memorialize the purchase agreement and start putting things in place to move forward on a close date.
Yeah, that's great. Very good. Are there any concerns regarding the first quarter losses that you guys have put forth?
Frankly, no. I mean, obviously there's always concerns when a company takes a loss. But when we look at what the company's been doing the last 12 months, I mean, we've spent a lot of money. We've spent well over $500,000 probably. Let me backtrack. We've probably spent $400,000 to $500,000 on accounting, audit, and legal fees alone over the last 12 months.
Yeah.
This quarter alone, or our first quarter alone, we had to pay our auditors an initial lump sum. We had to pay our accountant and legal fees. So, we're lucky enough that we're in a position as a smaller company, a growing company, that we were able to absorb that loss. We've had to get creative on certain financing, and we've had to, look at restructuring a few things. But frankly, no, I'm not concerned, because when I look at our revenue continues to increase. So that line's still going up. Our spend, yes, was also following suit, but the spend, we're coming to the tail end of our spend. So as spend decreases, profit is going to come back and go back to where it's historically been. Right.
All right. Good. As far as any kind of guidance for the next quarter or the remainder of 2022, do you have anything you could put out for us? What you expect?
Yeah, well, so first off, Q1, we showed despite the profit loss, we did show growth Q1 over Q1 from 21 to 22. I think it was around 13 to 14%. Q2, I'm expecting a similar growth quarter over quarter, our quarter two of 21 versus quarter two of 22. For my annual projections for the company itself, if I'm just isolating HeliosDX and not looking at acquisitions, I'm expecting us to do about $7.2 million this year in revenue on HeliosDX alone, which is an increase year over year of about $1.2 million.
Yeah, that's great. So this next question, I'm going to kind of weave into another question that was submitted over Twitter. The question is in regards to a dividend to shareholders when HeliosDX spins out of Rushnet. And the question is not only about a dividend, but is there going to be a different dividend that's offered to long-term investors that may have been, investors of the stock for a significant period of time than maybe a short-term investor that came in this month?
Unfortunately, based on my legal advice, I don't think we can treat a shareholder differently, whether you own it for a day or a year.
Gotcha.
The fact is, if you own shares on the date of the next dividend date at close of business, you're going to qualify for that dividend. And so, there's no advantage if you owned it yesterday versus owning it, next month or even last year.
Totally understand. What's the time frame, like a realistic time frame for the spin out of HeliosDX?
Well, so what we're doing when we get the final audit and the Reg A, now they're intertwined. The Reg A will come with the audit. We will immediately, same day, file to the SEC. We will file the Reg A. That's important because in the Reg A, we are including the split off of HeliosDX. And so that's kind of going to happen parallel to one another. So my expectation, again, it's an expectation I have today. I don't know what the future holds, but the expectation I have is from the date of submission is, about 90 days from then to be able to have an ex-dividend date in place. If not sooner on an ex-dividend date, but having that process completed.
Fantastic. What are the plans for Rushnet following the spin out of HeliosDX?
So we have a lot of discussion going on right now. The plan as it stands today and is Rushnet will become Grand Asia Healthcare. As it stands today, we've got a couple ideas we're bouncing around. The ultimate goal here is to drive as much value into Rushnet as possible. And if that's bringing in another entity, we're going to be looking at doing that. There's a lot of different things we've got on our whiteboard we're looking to do with Rushnet. But in terms of what we can announce publicly today, it's Grand Asia that will be left inside of Rushnet. Okay.
All right. And I'm sure the next question is probably going to be some type of similar question where you can't really get too detailed. But do you have any kind of information you can tell us about what the dividend you expect to look like?
I can't give you the exact number on the dividend, but what I can tell you is this. I'm expecting the dividend to give HeliosDX a share foundation of anywhere between 10 to 16 million shares to start from that perspective. Now, keep in mind that's just the outstanding shares of the dividend. There are, I'm not saying that's what the share structure is going to be because there are other shares to play a part, but I'm expecting that dividend to fall anywhere between 10 to 16 million shares.
Okay.
That we would give out to the Rushnet shareholders.
Okay. Very good. And will there be a conversion option for shareholders? If so, what would that look like?
That's certainly something that is on the edge of the table.
Okay.
I can't tell you what it's going to look like, but I can tell you it's very much being considered. And there are conversations I'm having that I need to make sure that one, I'm giving as much value to the Rushnet shareholders. In the same respect, I need to make sure that I'm not setting HeliosDX up too much with too many shares that keeps us from achieving the goals of getting HeliosDX to the NASDAQ or New York Stock Exchange or to any other higher exchange for that matter. So it's a fine line. It's one of those things we've got to look at share structure. We've got to look at price, and all that plays a part into what we can do.
Absolutely. And so what is the plan and direction of HeliosDX following the spin out beyond the 15-month plan that you guys, I believe, have talked about?
Well, it's been reported HeliosDX, our plan for Helios is we expect in now less than 3 years to be a $50 million company. So how are we going to do that? The first is this acquisition that we have on the table. This acquisition is important. I don't want to say if it didn't happen, it would keep us from hitting our goals because there are many diagnostic laboratories that I can acquire today to achieve our goal. But this acquisition in particular does a few things for us. It quadruples our capacity. It greatly increases our sales force reach. It gives us, we're buying the land and the building where the current lab stands. So it gives us assets, brings assets into the company, but it also gives us expansion in the future because in this building, there's some empty space next to it. That's going to allow for future growth. And that's extremely important for this reason alone is there are other acquisitions that are going to happen in the future. And so, the great thing about the diagnostic space or laboratory space is when we acquire a laboratory is we don't necessarily have to acquire those liabilities. And what I mean by that is, let's say we acquire another $6 million lab, and they have heavy expenses of that laboratory or that lab with overhead and all these other things. Well, we don't need the liability. We're just acquiring the business because we can bring that business into our laboratory and be able to absorb that business without bringing in the costs, if that makes sense.
No,
So
it does.
expansion and empty space is really vital to us achieving our goals, because it's going to allow us to grow quickly, grow our revenue, but not increase spend on the same level.
Gotcha. And this might be a good time. I should have done it at the beginning, but Ashley, if you could just tell me and tell the audience your background. So are maybe from schooling and business, medical stuff. I mean, obviously the company's based on medical related practices here. So do you have a background in that before you started Rushnet or before you acquired Rushnet?
Yeah, so I have a master's in organizational management.
Okay.
I worked in the healthcare field for about 12 years before I acquired Chattahoochee Physician Laboratory Service, or now HeliosDX.
Okay.
I worked for various companies, Cardinal Health, excuse me. And through that, I've always been in sales, always been in healthcare. I've been able to create a lot of relationships in the healthcare space.
Right.
By doing that, as I was in my sales career in management, I did account management, territory management, growth, etc. I was, for two major companies in the respective industry, I was rep of the year. So I knew how to manage a territory. I knew how to grow the business. At the latter part of my healthcare days of selling devices and things of that nature, I started dabbling in the diagnostic space, probably around 2015, doing lab stuff on the side. Just basically I was, using my relationships to go out there and grow business. And I quickly found that I had a passion for diagnostics. It grew on me, and by that I formed a relationship at Chattahoochee Physicians Laboratory Services, where I became their national sales director, VP of sales, whatever title you want to give me. But we grew that company substantially from the time I was there to the time of acquisition. And I always knew that if I could acquire that company, that I could grow it even more. So when I acquired Chattahoochee Physicians Laboratory Services, they did about $2 million. And in 2 years' time, we've done $6 million. We went to 4.3, then to 6 million last year. Of course, talked about the growth today. So that's a little bit about my background in the healthcare space. I've worn many different hats. Ultimately, it's proven to be successful in the diagnostic space.
Fantastic. And now on previous occasions, you guys have mentioned that there's launch plans for other types of testing. How do you think the new test will impact revenue and profit for you guys?
So we have new testing we're going to launch. One test is, give you a little background about the test, but not too much. But one of the tests we've already validated in-house, so we're going to launch it as an in-house test, meaning that we are going to run the test. The other test, we're going to launch it as a reference test, meaning that we're going to offer the test under the HeliosDX umbrella, but we're going to let another laboratory process those tests for us, and we'll do the billing and manage our customers and physicians and clients. That's important because it allows us to really get our feet wet on this test to see if it's really where we want to go before we spend the money. How I see this impacting the bottom line, one of the tests is an add-on to our current urinalysis or toxicology. And I expect it to increase revenue over a 12-month span just on it alone, right off the bat, $600,000 to $1 million a year.
Nice.
And that's over a 12-month span. The other test is, again, and I don't want to mention the test yet. The other test is, it's also a complement to what we offered today. but it gives us a pretty unique selling advantage when we go into certain practices, pain physicians, etc., that a lot of labs don't have out there currently. So it's something that we feel like we can bring to the marketplace, not cannibalize our current business, but be able to use it as a selling advantage to go out there and actually get new business. I would expect in 12 to 24 months, that segment on this new test to be doing anywhere from $200,000 to $300,000 on a monthly basis, anywhere from realistically $2 to $3 million, and that's just looking internally as we are today.
Nice.
What I think we're going to see in the future with this one test that I don't want to mention yet is that we're going to see a shift of our urine toxicology to this type of test in the future.
Okay.
So
fantastic.
And so kind of the reasons we've held off on launching this test, because we could launch some of this today, is we want to get the audit out there. We want to get this in place to bring up morale in the marketplace of our current shareholders and future shareholders of what we're doing, and that what we've said is accurate and true, and the finances that we've put out there. And we certainly have noticed over the last several months that the news we've put out there hasn't had much of an impact, and it's because that the elephant in the room. You're waiting for the audited results. So
sure,
we want to deliver that. We want to make that right, and then we can start moving forward with the abundance of news we kind of have in line.
Fantastic. This next question here, I think you guys have already kind of answered it, but I'm going to ask it again to give the opportunity to explain. So why has the company's expenses increased year over year?
Yeah, I mean, I think a lot of that's probably, we talked about it earlier, but I think a lot of that's self-explanatory. Obviously, we were a private company that went public. We didn't take any loans out to do that. It's very expensive to do it. I mean, we have a lot of one-off expenses. We have a lot of ongoing expenses that frankly we've been able to absorb up until this first quarter.
Sure.
But the reality is we expected to be at the financing phase before the end of 2021. And so we didn't hit it. We were lucky enough that we were in a position to absorb some of those increased costs, accounting costs, auditor costs, legal costs. We spent money on our national branding campaign via commercials. Obviously, we spent money on New to the Streets. I mean, we've spent a lot of money really going after branding who we are and what we're trying to do. It's in my mind, we've spent the money well. Unfortunately, like many shareholders have pointed out, it's been slow on getting certain achievements done, of which many are out of our control, and that really have affected us. But something that soon will be addressed, and our cash flow and expenses are cash flow is going to increase, expenses are going to come down, profit's going to follow.
Okay.
So we do have, if I can touch while we're just on the finances really quickly.
Sure.
I will have a pretty big announcement coming out this week. We are restructuring when I purchased the laboratory in 2020, we're doing some restructure on that financing that is very, very favorable to the company. That the previous owners are, they want to see us be successful. And so they've agreed to restructure that so that we can immediately impact our cash flow. So we can kind of weather the storm and get through the spend that we're doing to accomplish the ultimate goal. And the ultimate goal is to be audited, to be spun out, and to be striving towards a NASDAQ or NYSE exchange.
Right. And then so the follow-up question to that, I think you've already answered as well then. So the plans to decrease expenses and bring spending under control. And you pretty much touched on that in the previous answer. So is there anything further you wanted to talk about with that?
I would just say, obviously the accounting costs are going to drop. The auditor costs, those are one-time fees. Legal fees are going to going to drop as well. But there are some things that are going to kind of come back in as well as being an SEC reporting company, and we're going to be doing ongoing audits. I mean, those are costs that are going to be built in over time. So we're going to see those expenses tail off here in the short term. But as we move to Q3 and Q4, we'll see some of those expenses come back in. But by that point, we should be in our capital raise phase and beyond. That we're not really at this point concerned about long-term expenses currently.
Right. Okay. So the following questions here have been submitted over Twitter, and so some of the answers you've already given to us have been covered in some of these questions. So I'm going to maybe take a few seconds in between asking here to just go through them so they're not duplicates. One of the questions submitted by a user, Show Enough, on Twitter. We've kind of covered the question, but basically that person's asking if you could keep up on explaining, on Twitter why the audit is taking longer than expected, to keep the fear from overtaking the stock price. If you guys can just maybe continue on updates about the audit process. We covered the spinoff. Was there a different plan going into the spinoff of HeliosDX? Has that changed at all?
Yeah. Well, I mean, obviously in the summer of 2021, we had a pretty elaborate plan. We were going to spin off. We're going to do a dividend. We're going to have a conversion. We're going to have a rights buy. There was this very, very confusing plan to the marketplace. It was a very good plan for the shareholders of Rushnet. It was very confusing to the marketplace. Ultimately, we had to divert that plan, and not because we didn't believe in the plan or we didn't think we could work through the confusion, but ultimately at that time we could not get audited. Rushnet could not be audited. That means any plan we had for a split off or even anything you can think of in terms of a split off or bringing in Rushnet value to the shareholders, we were stuck because we couldn't audit Rushnet.
Okay.
So, I've read and I've heard many times that the company or Ashley has done a rug pull or things of that nature. In no shape have we done a rug pull. Right. We believe in what we've done. We've accomplished a lot. Now that the audit is done, we're going to be able to go back and revisit some of those plans and some of those things we're going to be able to bring to fruition. Okay. So, that's kind of where we sit on that.
Okay, very good. I'm going to skip the next question. Maybe I'll come back to that at the end. As far as we talked about future acquisitions, and that there's a company out there you guys are looking at with an LOI that's already in place. How does it look in regards to dilution of the actual stock itself? Is it going to require a lot of stock to purchase that company?
Well, as it stands today, the Reg A is going to be done via HeliosDX post split out, meaning there'll be no dilution into Rushnet as things stand today. No shares are going to be sold, etc. And there's a lot of advantages to doing it like this. It's because HeliosDX is where the value really lies as it currently stands today. So when we split HeliosDX, and I'm going to throw an arbitrary number out there, but let's just say HeliosDX with the split off dividend that we have is worth $1. The capital raise through the Reg A is substantially less impactful than it would be if we did it through Rushnet. Right. I mean, it would take billions upon billions upon billions of shares to raise the capital we need to raise through Rushnet. By doing it through HeliosDX, and this kind of goes back to what I talked about earlier. There's so many moving parts here we're looking at. We're looking at the dividend. We're looking at potential conversions. We know we're raising $20 million. We know there's a share structure that we want to stay within that's going to allow us to potentially to go after the New York Stock Exchange or NASDAQ. And so, price is important post split off, and it absolutely affects every facet that I just mentioned. How many shares we can award shareholders on dividends, if we can do a conversion, and if so, how many shares can we do for the conversion, and does that even make sense for Rushnet shareholders? When we have 2 term sheets from family funds. How many shares of both have agreed to fund the entire 20 million. Price of HeliosDX is going to matter, and how many shares we have to divvy out to those guys. So,
sure.
There's a lot of things we don't know because we don't know what that share price is going to be yet. If
Right.
we looked at it today, if I took Rushnet for what it is today at, I don't even know where we're at right now, 0015, if you took a split ratio of kind of in that range I gave you earlier, if you did backwards math, multiply that by whatever, and you're going to get the price of HeliosDX
Sure.
post split off. And so who knows what that price is going to be. In terms of, and I think you mentioned this earlier, that someone mentioned share price. I care about share price, but it's something right now here in the short term that, I understand what's happened and what's transpired the last year. We ran up, and over the last 11 months, it's trickled down, and I care about that stuff. But it's one of those things, when I look at the big picture and I think about March of 2021, prior to HeliosDX being introduced into Rushnet was trading about 0012, anywhere from 666 to 0012 to 13.
Right.
So when I look at this thing 12 months later and I see there's a $6 million+ company inside of Rushnet and it's trading where it was at 12 months ago,
Mm-hmm.
I don't think I need to say that we're undervalued. I mean, I believe the market will eventually value us for what we are. And if the market believes we should be valued as what a pink current company, or excuse me, a dark company should have been valued a year ago with no revenue, then, I'll have to accept that. But I believe that when the audit comes out and we start releasing the news we have, the share price is going to follow suit, and the shareholders that are with us are going to be happy.
Right. Well, and I got to believe too that everybody that's listening to this today that's involved in trading, investing, they know that the overall broader OTC markets have been in the tank, since last February or March, and so the fact that your stock price has seen that same trend should be nothing that's extraordinary. Every stock has been affected. So
Sure.
So anyways, the next question is, and I think based on what we talked about, it kind of covers this, and maybe there's a little bit of confusion here, but this is another question by Shonuf. It says, what's the company's plan to shore up the share structure, and how can we get assurances that it won't be yet another bait and switch? I.e., what filings will be done to show the process is on the up and up? And I believe we've covered that in the sense that your plans are to spin out HeliosDX. Maybe the question is, what remains of Rushnet and its share structure? If you can kind of get into that.
Well, let's be honest. Rushnet's share structure right now, it stands today as 8.1 billion and change. If I were to buy back shares of Rushnet at current price right now at 0014, that's 1.4 million for every billion shares. So we're going to we would spend over $10 million to buy back shares. That's just not feasible. It goes against everything the company's trying to accomplish. So the only real way to impact Rushnet's share structure is via a reverse split. Well, that's not what we're doing. So the way I would like to impact the Rushnet share structure is via some type of conversion that we can do through HeliosDX, during the split off process. But like I mentioned earlier, what can be done and how much can be done, it remains to be seen. Share price does become important at that time. So as far as Rushnet after HeliosDX, Rushnet's going to remain, or HeliosDX is going to remain inside of Rushnet. And we're going to be looking at, like I mentioned earlier, several options, whether that's other entities that can come in and bring significant value, whether that's, Grand Asia completely taking over Rushnet by themselves. What I can tell you is we're not going to let Rushnet go back dark just because Helios is out of it. Rushnet will be maintained. Rushnet will have an active business in it. Whether that's Grand Asia Healthcare or something that's much larger remains to be seen. But that is a commitment I can make for Rushnet, that Rushnet has a bright future outside of HeliosDX. And one that we're actively looking at, all types of options. But Rushnet will, I'll go on record as saying this, we will maintain Rushnet Pink Current. We will maintain everything in place, the SEC contact and keeping up the reporting, etc., because that makes Rushnet that more valuable. And we've spent the money the last year to make it happen. We're not going to let it go by the wayside.
I'm going to jump past some questions that were submitted by Gio on Twitter, because I think those have been answered, and also asked and answered. So to a question submitted by Thawer on Twitter. The question is, and I think I can answer this one, but what is the advantage of the current strategy for shareholders versus just keeping HeliosDX, Grand Asia, and future acquisitions together as one corporation with the goal of moving them to NASDAQ and exchange as a larger corporation?
Well, a couple things. HeliosDX and Grand Asia at some point have to be split off from one another. They need to be separate entities. And there's a lot of reasons for that. But
right.
In terms of keeping everything inside of Rushnet, I mean, there's a lot of reasons. Share structure, 8.1 billion shares. If we were to stay inside of Rushnet, that means we're doing a reverse split. There's no way around it. We have to do it because we can't be a legitimate company with 8.1 billion shares.
Right.
And so you have the dark history of Rushnet that we're still overcoming. There's still a lot of work to be done on that side of the fence that we're still working through. So for us to keep everything inside of Rushnet and to accomplish our goals, we may be pushed out another 12 to 24 months and still have to do a reverse split. So it's counterintuitive to everything we're trying to do right now.
Understand. From I the Tiger on Twitter, in your latest PR, you stated one of your goals is to grow the business to $50 million in revenue within 3 years. How do you plan on achieving that, and what steps are you taking to put yourself in that position? And again, we've covered some of this, but if you want to maybe expand on it.
Yeah, so obviously the first acquisition we're doing, we talked about how the importance of that is for kind of our future planning. While by all means, again, if that acquisition were to fall through, it's not the end all. We have many other acquisitions we can go after. It's just the one that's on the table and one that I like right now.
Right.
Why, this acquisition itself, we believe after a full 12 months operation that we can do $20 to $25 million in revenue with combined operations. With the $20 million Reg A we're raising, even after the acquisition spend, and then we pay off company debt, etc., we'll come out of the Reg A, with the $20 million capital raise, 2.5 times bigger than what we are today. We will come out of it debt free. We will come out of it equipment and lease free. We will come out of it with over $6 million in the bank for our next acquisition. So in order to achieve the $50 million target, it's going to be twofold. One is the initial acquisition and achieving those goals to 20 to 25 million. Two is the next acquisition we're going to do. That's going to, hopefully bring another 10 to $15 million to the table, of which we feel like is enough to get us to that $50 million range after, we get a full 12 months operation. We just got to find the right target. I do have some in mind today, and just see if it works for our business.
Sure.
So, in short, it's organic growth and it's acquisition, which is very common in our space. When you look at LabCorp and Quest, how did they grow to be these super labs that they are? And even other large box labs across the country, they grew that way through buying independent laboratories.
Right.
And why can't we do it?
Sure.
But with a different model, we put our patients and physicians first. And, no matter how big we get, my team's job is to make sure that stays in the foresight of, the forefront of what we're doing. And we're going to keep it that way, not to lose sight of that. It's important.
That's awesome. It's good. The last question by the Tiger. Some investors believe in your vision and have invested substantial capital around the 1 cent level. What do you say to those investors as a boost of confidence for holding through the tough times in today's markets?
I mean, I obviously, as being an OTC trader myself at one time, my heart goes out.
Sure.
I get it. I understand it. Here's what I can say, and I can say this with everything in me. We are very real in what we're doing. This is not a rug pull. We're not trying to sell a pipe dream. We are very real in what we're doing. We are a growing diagnostics company that has gone from 2 million to 4 million to 6 million over the last 2 to 3 years to over, I believe we're going to do over 7 million this year. So I believe in our vision. If we achieve and execute our plan, being at a penny in the future, I believe that's going to turn out to be a tremendous buy.
Yeah.
Can I promise that? No, because I don't think we should be at 0.0014 right now, but I don't control that. And so, but what I do control is execution. The things that we can control as a company, we are executing.
Yep.
And I know that, that probably brings a chuckle to some, but the things that haven't been delivered are things that are out of our control. I cannot control auditors. I cannot control FINRA. I cannot control the SEC. I could not control whether or not Rushnet could have been audited last year. The things that I could control, the execution of growing our revenue, the execution of our branding, national branding plan and bringing awareness to the business, the execution of our PCR, the execution of validating and bringing in new tests. All these things equal a growth in revenue and a plan to the future. So when you grade Rushnet and what we've accomplished the last 12 months and what we could actually control, we've executed at a very high level. The things that we couldn't control, we have applied pressure. We've accepted where we needed to accept, and we pushed it back where we needed to push back. And right now on the auditor side, on the Reg A side, we're pushing back extremely hard. We understand the time constraints or the necessity that people have out there, and we want to deliver this immediately. And we're pushing very, very hard.
No, it's awesome, man. I mean, the fact that you came on here to explain all this and take your time to do so to the investors, I think that's a huge thing for your company. I mean, you're not running from it. You're out there trying to give an explanation, and that right there should instill some confidence. So.
Well, Ryan, and I appreciate you recognizing that, because that's the one thing that hasn't happened. I tweet a lot. I say a lot. I tweet a lot. One thing we haven't done over the last 14 months is hide. I have not backed down. I have not hidden. I have a now famous, back and forth with Mr. Sykes, which, we have opinions on whether or not that was a good idea.
Who's Mr. Sykes?
Probably
I'm banned by him, so I wouldn't know.
What's that?
I said I wouldn't know who Sykes is because I'm banned by him. So
well, there you go. It probably wasn't the best idea, but my point is us as a company, we have not backed down. In fact, what I've learned over the last 14 months, I've tried from day one to be as transparent as possible. Good, bad, or indifferent, I've tried to be transparent. And a lot of times that's been a problem for myself. Instead of staying quiet and maybe, putting out one tweet every month, I went on Twitter and I've been transparent. Yeah. It's the way I run my life. It's the way I run my business. And I feel like it's the way that shareholders deserve to be treated.
Yep. And more power to you for doing so. And I understand from your perspective too, it's a fine line. It's tightrope walk. And And going too far with information, or not having too much and hiding, it's tough. There's probably really no right way to do it. But no, I do appreciate you coming on here and explaining this to your shareholders, investors, and the people that bought in a penny and are sitting here going, well, what's going on? So I think it instills some confidence, and like I said, the broader market is what it is, and once we can get past that, we'll see where this goes.
Right.
And I'm going to ask one further question here. This is from Show Enough, and I apologize in advance if this gets personal. I have no idea what he's talking about. Yeah, I have no idea what he's talking about. Okay, so I'm just going to read what he has to say. Further explanation needs to be done in regards to Ashley's tweeting about tithing, and I'm assuming that's how it's pronounced. It is a conflict of tithing. Okay, so I was wrong. It's a conflict of interest that he is applying shareholder or company allocated dollars to a church. Now, I'm going to ask you first off, is that going on? And second off, if it is, can you explain why or what it's about?
Yeah, 100%. So, I tweeted last. Jan and I, COO, went on a Poland trip. It was a mission trip through our church.
Okay.
And I started getting some private individual messages and about the trip. So I made a decision. The original plan was to keep it quiet. It just wasn't something we were going to discuss. But when I started getting private messaging, because people saw it on my personal page, I said, okay, hey, I better, let's announce this, let people know that this is what we're doing and this is who we are. It's time to let people know some of the values of the company that they don't know. So I did put a tweet out, talked about Jan and I leaving the country to Poland, going on our mission trip. It was personally funded. The company did not spend any funds on that mission trip. We did not spend over $300,000 to supply medicine on that mission trip. That was donated by other companies to the church. Jan and I just got to be, part of the mission trip to be able to deliver that medicine. So that's first and foremost. As far as tithing goes, I'm not gonna put my head down in being a God-driven person and running a company off faith. We made a decision earlier this year, Q1 of this year, that we were going to be a faith-first company, meaning that we're going to instill our Christian values and intertwine them within our professional company corporation, and that's what we're doing. So part of that is tithing. What tithing is it's charitable donations, whether it's to the church or it could be the church, it could be women's services, anything that would be considered kind of like advancing the kingdom, if you will. And so we made a decision on the company. That's something we needed to do. We needed to be, if we're going to be a faith-based company, we need to advance the kingdom. And so with that, we made a decision to tithe. That means to give a charitable donation on a monthly basis. Now, it's been pointed out several times that it's irresponsible, that it's not my fiduciary responsibility, etc. And here's my position on this. As a faith-based leader and running a faith-based company, it's absolutely 100% correct. I have fiduciary responsibility to the shareholders, to myself and my employees. I also have responsibilities to run the company how I see fit in terms of integrity, our pillars, our foundation, etc. And faith is one of them. In terms of tithing intertwined with fiduciary responsibilities, in first quarter of 2022, which is the first quarter we did charitable donations, we did a grand total of $6,000. Right? So when you think about what we did from a company perspective, I tied more than that individually. We tied $6,000 as a company, because that's all I felt like the company could afford to do at this time. Right? It was being food, depending on where you lie on your faith and whatever, some people say up to 10% of your gross revenue. We didn't do that. We looked at what we could afford to do as a company. We said, okay, hey, this is what we can do.